Hey everyone, it's Cathy Sabater. I'm a mortgage broker and a proud veteran. I'm here with Collette Jimenez, a phenomenal realtor, and we're here to talk about what today. What about today, Collette?
We're talking about foreclosures. Hey guys, it's Collette with Century 21 Affiliated, and we're going to talk, after we talk about the market, of course, we're going to talk about foreclosures, what that means to your credit, and what those alternatives look like. So let me throw it to you, Kat, to talk about if there's been any significant changes in the lending market in the last week.
Well, as we all know, with everything going on with the tariffs, everything is being affected, right? All prices are going up. You can hear in the news that they keep saying that interest rates are going down, right? But they fluctuate many times in a day, right? On top of that, we're no longer in the 7 and the 8%. We're still in the high sixes. We were going down to the lower sixes to the higher fives, but that now is on a hold. So when you hear the news saying, hey, rates are going down, they're going down compared to what they were before, but the high sixes is still a good rate. But some of my clients that have fives and sixes, they're like, yo, Kat, when am I going to be able to refinance? Well, when the market allows us to do so, right?
Yeah.
And for those buyers and sellers that have to sell to buy, then it's all about making sure you have an understanding of what's going on with the interest rates. Because if you're selling to buy, right, you're more than likely going to put money down. Are you going to do a VA
Right.
loan? You're going to do FHA loan? You're going to do conventional? As we all know or should know, most government loans, VA and FHA loans, usually have a lower interest rate than conventional. And why is that? Because they're insured. That's why.
Right. So I think that there's a misconception, and maybe you can clear this up. When you hear on the news about the rates, I think people sometimes think, so they hear, oh, it's 4%, but that's not lending rates for what they would get on
Correct.
a loan. What are those rates in reference to, and how are they attached to lending rates?
Okay. So I did a video in regards to the US Treasury, right? So the 10-year Treasury is what a lot of countries invest in for us. So mortgage-backed securities and the 10-year Treasury bond. That is in the fours, right? It went down to like 3 point something, and now it's in the 4.2, 4.3, and it keeps fluctuating back and forth, but it's still in the fours. So what does that mean? That means that's the treasury bond, right? The other one is the Fed fund rate. The Fed fund rate is the rate, which is in the fours, is that's what they charge the banks to charge us. So I know most of you have credit cards. What's your interest rate? 20%?
Yeah.
24%? Well, who's making all that money? The banks are, right? Because they're being charged 4+%. So if you add like a 2% to it, so let's say the Fed fund rate is 4.5, add two, mortgage interest rates might be 6.5% and higher. That's a good
Okay.
way to gauge what's going on in the marketplace. But then again, you're doing conventional. Are you putting 10% down? Are you putting 3% down? Are you doing the down payment assistance program, right? Are you doing FHA, VA? So when you're dealing with all these different loans, you have all of these things coming together. But at the end of the day, rates are in the high sixes. Now, some people may qualify for less, but the market more than likely will dictate what the rates are. You can have an 850 credit score, but if the market says interest rates are in the sixes, you get a 6% rate. When everybody was getting 2 and 3%, right? It didn't, you have to have good credit, but
Right.
the market dictated that we were in the twos and the threes. We can have another
So,
conversation on why that happened, and that had to do with the Feds buying mortgage-backed securities. And
okay.
that's why they kept the interest rates lower, because when you invest in your own country, so to speak, he kept buying, 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 buying to keep the interest rate lower. Now, China and Japan own most of our mortgage-backed securities. So with this tariff thing going on, I'm going to segue because it is important. Japan was selling our mortgage-backed security. So what does that mean to us? Well, that's not, it's good and not good, right? It's just like owning stock, but it's mortgage-backed securities and treasury bonds. So when people start selling your stuff off, that means it can potentially go down,
The value is going
right?
down. Yeah.
So like people like with me, I'm sure you too, we have a lot of families who have rates in the twos and the threes, fours and fives. But the people who have the lower interest rate, I don't know if you have the same servicer. You have the same person you're writing the check to. My loan has been changed at least 4
Several
times.
times.
Right.
Right.
Why is that? Well,
Because it's being sold on the secondary market, right?
well,
Or
if your rate is 2.75 and interest rates are 6.8, let me think about it. Do I want the 6.8 interest rate or do I want to keep servicing a 2.75?
well, yeah, you want the more money.
Yeah, I want more money. And on top of that, people also have to understand most banks, not all of them, but they use a pocket of their money to use to give out loans. Well, if they keep all those loans, then they limit how much loans they can sell. So a lot of companies, as I'm sure you know, a lot of small banks are no longer in business. Wells, the Bees, and all those other kind of companies, they lay off people, right? And they
Yeah.
hire them again. And they lay them off and then they hire again. Because a lot of it has to do with how much money are they earning, right? So if I have a 2.75 interest rate and I'm servicing it, and let's say the loan is 500,000, I don't have $500,000 to give to another family. Multiply that by thousands, right? So
Right.
I'm making 2.75 here. If I sell it, I can get my money back and do more loans. But now I got loans at 6 point whatever.
So then they're making more money.
Correct.
And that's the name of the game.
That's the name of the game for
So
some
the
people.
simplistic version is that the market rate affects the mortgage rate. They're not one and the same because that market rate is what the Fed is charging the banks. And the banks obviously want to make money because that's the name of the game. They're
Mhm.
charging us to utilize their money.
Correct.
So then they add on top of that what they're paying for the loan and then what we pay for the loan. So that's how they make their money.
Right. So when the Fed fund rate was at zero, that's why interest rates were in the twos.
Yeah. So when I
So
bought in 2020, I think our interest rate is 3.3.
great.
And so it must have been around 1%.
Right. And at the end, it all boils down to the market usually dictates, like your listing agent, right? So you know, hey, I have
Yeah.
this beautiful house. I made all these changes in the world. But if the market says, like it did in COVID, you can get $50,000 more than what it's worth, the market dictates what you
Right.
can sell the house for. But it also depends on how much buyers are willing to invest, right?
Yeah.
We still live in San Diego. They keep saying that, the market has slowed down, but have you seen a change in home values compared
No.
to? Mhm.
Well, okay. So that's a loaded question. Yes, I've seen a change. So we have continued. So we had a spike, a significant spike in 2020 when everyone was at home, cooped up.
Mhm.
And as realtors, we really thought it was going to follow the market, what China experienced,
Mhm.
which was a severe crash. So then it
Mhm.
would fall into being a buyer's market, and buyers were like on board. They were so ready, and we saw the opposite. Everyone was home. They were like, let us get a bigger home. And
Mhm.
so there was inventory shift where people were buying up. And so that was unexpected because we did expect that similar trajectory. So what we saw was people wanted to have a larger space. We had kids at home doing distance learning. We had people working from home. The world shut down. And so we saw that shift. And like many people, we opted to move as well.
Right. So again, it shows that the market will dictate you still. California still has high values, right? In COVID, we
Yes.
were in double digits, and we were
Yeah.
kind of afraid of the double digits. It was like too unreal. But now we're in the single digits. So depending on what zip code you're in, we are still experiencing equity
It's,
home
yeah.
growth, even
Yeah.
in,
It's
yeah.
that incremental, it's been incremental as opposed to exponential is what I was
Mhm.
going to say. So where we saw that big jump in COVID, we're still seeing an incline in most of the market. If you look at the data, it's like
Mhm.
but it's still trending up.
Right.
We're still seeing, like, so for Fallbrook, for example, since the same time last year, the interest rate or the price point on the median home price has gone up 0.6%. So less than 1%, but it's still trending upward.
Right.
And that's what we're seeing in a majority of San Diego is upward trends.
Right. So for buyers who are sitting on the fence, if you're gonna, I tell people, get pre-approved and look and shop for the house you want, because now there's more inventory than before
Mhm.
because it's taking a little longer
Yep.
because of the way interest rates are today. but give yourself the opportunity to have like a checkbook, right? I don't necessarily have to write a check, but you're going to know how much it's going to cost you, especially with the rates today when you go
Yeah.
out to look for the home. So to me, as far as the market is concerned, it shows like it's not a buyer's market, but it allows buyers more time because before the house is on the market, it's
7 days gone.
it's gone. So again, it all depends on what area you're going to
Yeah.
because certain zip codes have more desire than others.
Yeah. Absolutely.
Right. And that can segue into foreclosures now, right? Because we're no longer in the COVID pandemic where they put a stay on all foreclosures, right? Colette's going to talk a little bit about that. It's not that they're removing the stay, but we should and may, I know I just looked it up right now for foreclosures, and I saw like 7 listings, where before I wouldn't see that number, even though 7 is not a lot, but that's still an increase, like you were saying earlier,
Right.
it's still an increase in what the market is. So did you want to expound a little bit on the real estate side on the foreclosure?
Yeah, absolutely. Thanks, Kat.
Yes.
So, for those of you who don't know what foreclosure is, it's the legal process where the lender takes back the property that they have lent money for. So they take ownership of this property, and that is a direct correlation to when the homeowner fails to keep up with their mortgage
Mhm.
payments. It's a super difficult and stressful experience, but understanding the process and its implications help you navigate it more fully. So I'm going to talk about the foreclosure steps and proceedings, like what happens, how it impacts your credit, and then I'm going to briefly go over some options to avoid foreclosure. So the first step in the process that happens is, as a homeowner, you miss some payments, and typically you fall behind, and the bank is going to send you some notices. They're going to say, "Hey, you're delinquent," and after about 90 days, 3 missed payments, you'll go into pre-foreclosure, and the bank is going to issue a official notice of default. In the real estate, we just call it an NOD. And what they do is they set up a time period for the homeowner to get caught up on those payments. Now, if they're unable, unwilling, or whatever to get caught up on those payments, the bank then says, okay, we're going to start the legal proceeding process. And they are going to begin the legal foreclosure process. And that varies state to state. So you'd have to look at your own individual state guidelines. After those proceedings are begun with, you move into the auction or sale. So properties people have heard like, oh, it got auctioned on the court steps. So
Mhm.
they'll group together. So Bank B has 10 properties going to foreclosure. They just kind of group them together and sell them kind of like a lot. And so people are always like, oh, wow, I could get this super cheap house in on the courthouse steps. So that's another subject. But those properties can be auctioned or sold by the lender, and the idea behind that is to recoup their loss for the money that they had lent on it. And then what that means for the person living in the homeowner is no longer the homeowner, and so they oftentimes will issue something like cash for keys, which is an incentive to help you move on from the property. Or if those offers aren't made, those overtures aren't accepted, then they'll move into the eviction process if the homeowner does not voluntarily vacate the property. And that again is going to depend state by state. So that's a little look at what that process looks like. And I wanted to talk about what that impact has on your credit report. You will see a significant credit score drop, and it can drop by as 100 points or more. So if your credit's really important to you, you'll want to look at options to avoid foreclosure. So you get your points are dropped, you have negative mark on your foreclosure, and it can stay on your record up to 7 years. Again, varying state by state, depending on what the laws look like in your state. And so that, that can be really detrimental because you cannot buy a property in that 7-year period. It will also affect your financing of anything else,
Mhm,
cars, furniture, whatever it is,
mhm,
because your credit score has dropped significantly. People will be less likely to want to lend you money because you seem like a high risk
mhm.
and not likely to pay back.
Right. So the
So,
interesting thing about when you're talking about credit and depending on what loan you have, VA and FHA are more forgiving. So they will allow you to purchase a home before the 7 years. Conventional, they keep changing the rules. So
yeah.
conventional, it could take you up to 7 years, but you can go FHA or VA if you're a veteran, should you have gone through the foreclosure.
And they shorten that time period. Are we at like 2 to 3 years for
Yeah,
VA?
yeah, 2 years.
2 years,
So yeah,
which
and
is
so
significant.
yeah, it is. And the interesting thing about the foreclosure process, because you were mentioned, first 3 months that you miss three payments, right? Then you get into the pre-foreclosure process. This is where you need to call the Colettes of the world. What's your phone number, Colette?
619-838-1696. So I can help you avoid that.
Right. Avoid it, and or if you don't have the means to making the payments because you weren't making the payments, there's two things that go on, right? Usually health, employment are the two main reasons why people are not able to
Right.
pay their mortgage, right? Because they were paying their mortgage before. But if you do get in contact with Colette, you still potentially have a lot of equity in your home. So don't
Yeah.
wait for the banks to do the foreclosure. Call Colette and let her walk you through the process. Hey, how can we save the home? Maybe we can do A, B, and C. But if you do sell the home and you can get X amount of money, let's use that money so that you can have money for rent, depending on how much equity you have. And
Yeah.
then let's build a plan in the next 2 years for you to get a home again. I mean, that's really
Yeah.
how people should, but it's a very stressful environment. I lost my home because I remember in 2008, I had investment
Yeah.
property
A lot of
that,
people
you know,
did.
a lot of people lost their homes and we have foreclosures and short sales. We'll talk about short sales later because short means totally different from the foreclosure proceeding in that in the equity that we have today, we can assist you.
Yeah.
So that is something to look, think about because although foreclosure, and this is the sad part, what is someone's detriment now becomes somebody else's opportunity, right? And if the
Absolutely.
bank, if you own, I'm just do easy math. If you owe $500,000 on the house and the house is worth 800,000, you got $300,000 worth of equity
Right.
minus whatever it costs. Because if you go into the foreclosure, you got to pay more money to the courts, just so you
Yeah.
know, than if you allow a collect of the world to then help you sell your home. And then we're going to develop a plan for you to get a house. Because this is what I love to do, right? I'm here to help Colette and families. Yeah, it might take me 2 years or 3 years or 4 years to help you get a house, but I'm willing to invest that because we should do that. We should become more of a
Absolutely.
community to help people and educate them that, yes, I understand you had a shortfall, but now you're going to have X amount of money. Let's work a plan so that you can, one, have a safe place for your kids and
Yeah.
yourself. And, I also concern myself with our seniors. And let's develop a plan to see what we have to do, right? For some people, it
Yep.
means staying here in California. For others, it might mean, looking for another space to be in.
So that's what I like about Kat. So I've had clients before that had gone through the foreclosure process and they said, hey, we had this happen. We want to look at what we can do to repurchase. And it took us 2 years, a lot of work, sweat, tears, writing letters, getting things knocked off credit, saving up over those 2 years. But I stuck with them through that plan. They got that counseling through professionals like Kat, and so that's the services that we offer. And some people sometimes feel like, oh, why would you stick with me? You're not getting paid until I purchase. But this is our passion, especially for you having served in the military, and I'm a military descendant, and so I have a lot of love for that. So I'm always willing to sit there and help my clients navigate what that process looks like because it is going to pay off. We are going to get to the point where we get to start looking. We get that letter from Kat that says this is what you're pre-approved for, and we get to go shopping.
Mhm.
And that is the most exciting, fulfilling point to that process. And then, of course, the key day is, the cherry on top.
Right.
So it's it is a stressful time to be looking at something like foreclosure, to be recovering from foreclosure damage, but it's not hopeless and it's not the end of the road. It really isn't. So let me tell you about what those options look like instead of foreclosure if you're facing this process. So there's actually several options that you have. You can contact your bank and ask them about a loan modification and go through the loan modification process. And I've actually helped clients who thought they were going to lose their home to foreclosure or have to short sale it. And we ended up actually being able to successfully modify their loan. Back in 2007, when I was seeing a ton of short sales, I was negotiating a ton of short sales. The window and the hoops that you had to jump through to get through that loan modification process was just such a narrow space. Now, because of what happened there, the loan modification process has been streamlined and also has become, besides becoming more efficient, that window has widened. So banks have been significantly more willing to work with people to do those loan modifications. So the next option is forbearance. And we saw this significant uptick in forbearance during COVID times. And that's where they temporarily pause those payments while you get back on your feet. Most banks will give you a specific period, but it's limited. You can't every couple of years be like, oh, forbearance. And so that really is kind of a one-time thing or a one event thing. So you had a death of your primary financial contributor in your household, for example. And they understand, okay, now those financial assets are not coming into the home. We'll let you we'll give you forbearance on your payments for X amount of time. In that time frame, they're expecting you to be able to get financially in a position to replace that income and make those payments. And those payments are paused. Bear in mind, they're tacked on to the end of your loan. They're not forgiven, but they're paused. So it's a little pause button. Refinancing is an option, and that's where you call me up and you're like, hey, what can I do? And I toss you over to Kat and I go, Kat, what can we help these people refinance their home? Is there a way to be able to extend the payments, lower the interest rate? What can we do? And so her expertise is going to be there in that refinance option. Another option is short sale. So say you go into foreclosure proceedings or pre-foreclosure proceedings, you've missed payments, and you're actually upside down on your home. Short sale doesn't mean it's a shorter period of time to sell your home. It means you're short on the amount that's owed on the loan based on the market value of your property. So you owe $500,000, but the property has dipped in value due to the market and it's only worth $400,000 now. So the process is that we submit a packet and we go through this short sale process. The bank has to approve the amount that you've sold, that you can sell the home for. And so that's actually, we'll get into that in more depth next week and talk about what that process looks like. And then the last two options that you have are deed in lieu of foreclosure, meaning you sign the deed over to the bank and you give them back you give them the property in lieu of making your payments. So then that becomes a bank asset. They don't have to charge for the attorney's fees and stuff like that. And you transfer voluntarily that ownership over to the bank. And then there's also government assistance programs. So there are some state and federal programs that help aid struggling homeowners. And that, again, varies on your state and legislation. So if foreclosure is a concern, reach out to myself and Kat, and we'll see which one of those options works best. But like Kat was saying, if you have equity in your home, getting it sold and avoiding that foreclosure process is going to be significantly better for your financial health.
And I just wanted to reiterate, when we're talking about solutions, the foreclosure is the process of you losing title to your home, right? The
Yeah.
key at hand now is how do you want to strategically manage that, right? And so we're trying to say, hey, if you missed a couple of payments and you do need to call Collette. What's your number again, Collette?
619-838-1696.
So she can run through it, because each family is going to be different. And then
Mhm.
we're here to just be as a team to educate you and help you through this stressful time frame.
Yep. It's all about options, right, Kat?
Yes, it is. Yes, it is. Well, it was, listen, Collette, this was a lot of information. I'm glad that we're here. We're going to give this out to the people. And again, if you have any questions, please call Collette at.
619-838-1696. Thanks for your
Got it.
time, Kat.
You got it. Oh, by the way, she's in Hawaii. You would have never known.
Mahalo.
Mahalo.